Hello everybody, this is Lara from Pure Elliott Wave with your Monday to Friday update for Bitcoin, Ethereum and XRP. They're all moving lower today, Bitcoin and Ethereum making new short-term lows, but let's step back and keep our eyes on the bigger picture because this is still most likely a pullback within a larger bullish trend. At the monthly time frame, Bitcoin and Ethereum do still remain within bull markets, and they have been for over a year. We've seen pullbacks and consolidations before, and then price has gone on to make new highs. I expect eventually that's going to be the same case here. At the weekly time frame, Bitcoin still has a series of high highs, and it has a series of higher lows. This is the last highest high, so the previous highest low prior to that is the low of week beginning 21st of January at 38,512.34. In order for the pattern of higher highs and higher lows to be broken, we need to see a lower low below 38,512.34 to indicate a major trend change and a bear market for Bitcoin. While that has not happened, then that pattern of higher highs and higher lows remains intact. Support was at 60,700, that's broken. Look now for good strong support at 55,000. Most recently, upward volume to the last all-time high has been extremely strong, and now price is moving lower with declining volume. There is not strength in downward movement, which would be what you would expect if Bitcoin is in a bear market. It's weak downward movement, and that's typical of a pullback within an ongoing bull market. At the last all-time high, ADX was very extreme, but not as extreme as it can get, and it does tend to reach very extreme at the weekly time frame about the middle of a strong bullish run. To see what I mean, look back at Bitcoin's past strong bullish runs, particularly the one up to December 2017, and halfway in that bullish run, ADX on the weekly time frame reaches very extreme. The current pullback has only managed to bring ADX down a little bit, so we could see a further pullback or sideways consolidation to relieve these extreme conditions before the larger bullish trend is ready to resume. The pullback has brought RSI down from deeply overbought, but there was no bearish divergence. RSI is now in neutral. It's brought money flow down from overbought. Money flow is in neutral. ATR continues to show an increase even with this downward movement. Volatility has not left the market. Technicals on the daily, I noted this rectangle and I stated that in 66% of cases a breakout would be expected to be upward and 33% of cases a breakout would be downward. We've got the 33% outcome. We're having a downward breakout. If this current session can close below support at 60,700, then support there would return to resistance. Look for next strong support at 55,000. Yesterday's downward session showed some increase in volume, but overall volume is still declining as it moves sideways through the rectangle. We don't have a close for the current session of 1st of May. It looks like it will close below, but we can't tell if it's going to have push from volume. If the 1st of May closes red, on-balance volume is going to remain within its consolidation. When you have a breakout from price and it is not confirmed by a breakout from on-balance volume, and if it also lacks support from volume, then the breakout is suspicious. I'll be analysing this one carefully for you tomorrow. ADX is telling us that at this time frame for the short term there is a downward trend. Put that into context though, at the higher time frame, particularly monthly and weekly, there is an upward trend, not from ADX on the weekly, but the basic pattern of higher highs and higher lows does remain intact. RSI is neutral, previously reaching deeply overbought and exhibiting bearish divergence. This pullback and the sideways rectangle has pulled RSI well back into neutral. It's not yet oversold though, so there is room for price to continue lower. If RSI reaches oversold on the daily, I would expect that's to be extremely likely for the pullback to end, because RSI doesn't tend to get oversold at the daily time frame very often, and when it does, it is usually associated with sustained lows. Money flow is neutral. ATR has overall been declining as price is moving a little bit lower, so for the short term there is not volatility in this downward movement, although a slight increase for yesterday shows a slight return to volatility. My Elliott Wave count for Ethereum at the weekly time frame, Jack Frost went over this in detail for you yesterday, it remains pretty much unchanged. Still seeing a third wave at primary degree. Within a third wave there will be pullbacks and consolidations along the way. This is absolutely normal to be expected behaviour, and I keep saying lows for cryptos are very, very difficult to identify because they can be very weak up off their lows. Within primary 3 I have intermediate 1 here, intermediate 2 complete in 14 weeks, minor 1, minor 2 complete in 25 weeks, minute 1 and now minute 2 probably continuing a little bit lower as a double zigzag. Draw a base channel around intermediate 1 and 2 from the start of 1 to the end of 2 with a copy on 1. If minute 2 is particularly deep, look out for support at the lower edge of that channel. It's unlikely to get that deep though. These numbers are ballpark figures. Jack Frost explained these for you yesterday. The first 11.09 is an extreme Fibonacci ratio, but in Ethereum's price history, no large degree third wave is as short as 11.09. Its counterpart first wave. What we do have is two ratios exhibited previously. These are not Fibonacci. These are just ratios this market has previously exhibited, 15.28 and 19.13. If we see those ratios again, then these are ballpark figures for intermediate 3 and for primary 3. These are not targets. And when we have third and fourth waves complete within these impulses, then I'll be able to calculate something for you I'm prepared to call a target. That's not the case yet. Let's look at the daily. The high for minute 1 is this point up here. Minute wave 2 remains contained within its channel. As Jack Frost emphasized to you yesterday, we need to see a break above this channel with a full green daily candlestick above and not touching this trend line in order to have confidence that minute wave 2 is complete and minute wave 3 within minor 3 etc. is underway. While price remains within this channel, it is entirely possible minute wave 2 may continue lower, and this is where risk lies for this wave count. Minute 2 may not move beyond the start of 1 below 1521.78. It may be completing as a double zigzag A, B, C. I've just moved the degree of labelling here down 1 degree for minuet W. The double is joined by a complete 3 in the opposite direction labelled X, and now a second zigzag may continue lower to move below the end of W by a reasonable amount. So if this structure is correctly labelled, we should expect new lows reasonably below 2832.33 and look for support at the lower edge of this Elliott channel. Again, if price comes to touch that trend line, expect again it's possible that the pullback could be complete. But again, in order for confidence in that view, you have to wait for the channel to be breached by upward movement, or at the very least some strong technical indication that a sustained low is in place. Let's look at those technicals now. Just at the daily for Ethereum, it's in a pullback. There was no rectangle pattern. This has a series for the short term of lower lows and lower highs. The bigger picture at the weekly time frame does remain upward, however. This is just short-term movement. What was support at 3050 has now been broken. Prices closed below that, looking now for support again at 2720. Yesterday's completed downward session has some push from volume, although overall volume is declining as price is overall moving lower. And for the short-term downward movement can end on a little push from volume. So yesterday could be the end of downward movement, but we could also see some further downward movement with a slight further push from volume. If we saw volume beyond that seen for the 12th of April on downward movement, then my short-term picture for Ethereum would look more bearish. These are short-term movements, most likely still a pullback within an ongoing larger upward trend. What happened yesterday is not enough to change my view, as that is the most likely scenario. On balance, volume gives us a weak bearish signal yesterday with a break above support. The line has 3 tests, so a little bit better than 2 or maybe 4 if you count this first pivot, but it's got quite a reasonable slope. It's a little bit long held but not too low, but the slope reduces the technical significance of this line. We may have some follow through in another 1, 2 or 3 sessions of overall downward movement. I'll be looking for a bullish reversal pattern at support to indicate that the pullback may be complete. ADX is increasing now, indicating there is a downward trend for Ethereum for the short term. RSI has got a little ways to go before it reaches oversold, so there's room for price to fall further for the short term. Money flow also has a ways to go before it reaches oversold, but it doesn't tend to get oversold. I use RSI for these pullbacks. The Elliott Wave count for XRP at the weekly time frame sees a third wave at primary degree in its very early stages. Intermediate wave 1 completes as a leading expanding diagonal. Intermediate 2 still may be complete down here as a double combination, zigzag, X, regular flat, moving sideways. Combinations aren't actually very common structures. Less than 5% of all corrections will be a combination. They're not rare, they're just not very common. Once I did some research into it, it turned out they're not as common as I thought. It fits beautifully within a best fit channel. I've drawn it from the high of intermediate 1 to this high, placed a copy down on this low so that it contains all of this correction for intermediate 2. Now again, for confidence that this structure for intermediate 2 is complete, and that a third wave up at intermediate primary and cycle degrees is underway, we need to have this channel breached by upward movement. Cryptocurrencies can be very weak up off their lows, which makes their lows really difficult to identify. So using a very simple channeling technique will filter out those times you expect the low is complete, it's in, only for price to continue lower. When this channel is breached by a full weekly candlestick above and not touching it, I'd have reasonable confidence that a third wave at 3 large degrees is then underway for XRP. While that hasn't happened, this could continue sideways or lower. The daily time frame, the high of intermediate 1 is this point here. Intermediate 1 lasted 34 weeks, intermediate 2 lasted 40 weeks, fits beautifully as a double combination, zigzag, X, regular flat. XRP hasn't made a new short-term low. The correction could be complete still at the low for the 13th of April. XRP still finding support at 49 cents. It was unable to break above and remain above resistance at 54.55 cents. Today we have a death cross on the daily chart for XRP as the 50-day moving average crosses below the 200-day moving average. The last signal though was a golden cross, and it wasn't followed by higher prices. It was followed by sideways movement. These signals from the moving averages I give the least weight of everything on this chart. I use them as a delayed confirmation tool rather than a leading indicator because they are based on averages of past data. They're backward looking. So just because we've got a bearish signal here doesn't mean we should be expecting new lows. Because we got a bullish signal here, we didn't get new highs. The reverse is true. This last completed session has a bullish low and lower wick. The current session for 1st of May also so far has a bullish low and lower wick. I do take notice of wicks. We've got bullish wicks here, followed by a bit of upward movement. We're starting to see bullish wicks here as price moves slowly lower. A very slight push from volume for yesterday's completed session, but again, overall, price is moving lower with overall declining volume. There is not strength in this downward movement. It doesn't look like a strong bearish movement. It doesn't have push from volume. It doesn't have a good increase in range. It doesn't look like a real bear market. This looks like a counter trend movement within an ongoing bullish market. For XRP, on balance volume gives a really weak bearish signal with a little break below this purple support line, but it's only got the minimum required 2 anchor points. You need to draw a line. It's not long held, it is horizontal. This very weak support line could be followed through by just one more downward session, which could be today to close red, and if that's the case, it may be done there. This is not signaling a big movement. The signal is too weak. ADX at the short term daily time frame is telling us there is a downward trend for XRP and there's a long way to go before it reaches extreme. RSI reached oversold, however, on the 12th of April. That is still a really bullish sign. If we do get another slight new low from price, I'd be looking for bullish divergence to develop between RSI and price. If that happens, I'd have even more confidence that XRP's found a low. But right now, I still have some reasonable confidence in that low of 12th of April, because RSI doesn't tend to reach oversold on the daily time frame very often for XRP, and when it does, that's often associated with lows that are sustained. Money flow still neutral. ATR overall declining as price is moving lower. There is not strength in this downward movement. This doesn't look like a real bear market. If it was, we should be seeing increasing volume and range. As price moves lower, we're not seeing that, we're seeing weakness. That's it from me today with a quick update for you. I hope everyone is having a lovely day.